Hello, everyone. I'm here to tell you about how I go about valuing different stocks and like a few things that I've picked up on with my recent schooling. So, to begin, there are a few different things, and again, this is going to be a very rudimentary introduction into different methods that I take to value different stocks. And this is only like the first portion. However, if you know all these things, it's kind of good and you'll be in a good position. So, I don't know if I'd make a final decision based off of this. However, you will be in a very good spot where you could probably make a decision with a lot of confidence. So, to begin, the first thing that I like to look at when valuing a new company, this is a company that I hold a position in, is looking up their market cap, seeing how much is out there. How big is the company? And then I like to look at their beta. So the next thing is the beta of the market is 1, and the beta value is a measure of volatility. So how likely is the stock's price basically going to go crazy? Like, is it going to go up, down? Like, and what is the likelihood of that to occur? Is it going to be more than the market, or is it less than the market? Next thing that we have to keep in mind is our PE ratio. And so with the PE ratios, it's weird. So what does the PE ratio tell you? Well, it's the price to earnings ratio. It's the amount of dollars that you have to put in for the company to have $1 in earnings. So let's see, with this company, we have a 6.02 PE ratio, which means we need to invest $6.02 in order to gain $1 in earnings for the company, or its equivalent. And with the PE ratio, we need to keep in mind we need to compare this to our benchmark, which is usually the sector benchmark. So for this is a mining company, and therefore it's basic materials. So if we go over here, we have our spider fund for basic materials, and we see the PE ratio is 3.42 for this sector. So since this PE ratio is higher, what does that mean? Well, it can mean a few things. However, the first thing I like to look at is it overvalued? So if this is higher than your sector benchmark, it could be overvalued, or it could mean there's a lot of growth in the company. So for this company in particular, I personally think that there's going to be a lot of growth moving forward. The next thing that I like to look at is I like to scroll down here, and then I look at our revenues and our earnings here. So as you can see, we have increased revenues over the past 4 years. So that's all obviously a good sign. However, it's also important to see that earnings are also increasing. So for here, I mean, we have a slight increase in earnings year over year from 2020 to 2021. Let's hope that that continues. However, it doesn't look like we were doing too good back here. But as you can see, there is still an increase in earnings. The next thing that I like to look at is actually not on this screen right here, is under the profile tab. So the profile tab, it tells you a lot about the company, just blah blah blah, their sector. So you can find the sector information here, their industry, how many employees they have, and then you get a company description here. And then it's important to look at their corporate governance. So what is corporate governance? Corporate governance, the ISS score in particular, is the score given by an agency to basically determine how is their management uh, suitable for this industry, and are they gonna are they good people for the job? Are they do they manage the company properly? Blah blah blah. So 1 is the highest score you can get, or the best score you can get, and 10 is the worst score you can get. So usually when I'm looking at companies, I like to see a score of 1 to 4. So there's also something called an ESG score. That's environmental awareness. And I usually don't necessarily look at that particularly. It's not usually what I like to look for. So the next thing that we want to look at is the financials, and we're going to come down here and click on cash flow. And then what we want to see is we want to see an increasing free cash flows here at the bottom. So I know it's kind of hard to see based on this bar, but as you can see, we've here to 2018 to 2019, we'd actually have a decrease, but then from 19 to 20, 20 to 21, And then 21 to trailing 12 months, we all have increasing numbers. So this is a great sign that the company is growing. And this is also a sign that we can say, all right, that justifies their price to earnings ratio being higher than the sector benchmark. Since we have the company's growing, they're increasing, that's a good thing to look for. Then it's acceptable. The company's growing, they're doing a great job, so the P/E ratio can acceptably be bigger. If we had decreasing free cash flows here and our P/E ratio is still high, it means the company's overvalued, and I personally would not make that investment. Next thing that we do here is we go to the balance sheet, and we want to go under total assets, total non-current assets, and then we want to go to goodwill and other intangible assets, and we basically want to make sure this number here, so the amount of goodwill that we have is, so, and then compare that to our total assets. So we want to make sure that this is under 20% of our total assets. This is basically money spent in addition to what they, so basically when a company goes to buy out another company, they have to purchase it and then they have to pay a premium. This goodwill amount is basically a premium amount. So they're paying that much more than the market values the other company for. So essentially we just don't want a ton of goodwill. That's not a good sign either. So coming back over to our summary page, I actually believe that this is a good company to look for, and then this is XLB, this is there, and you can go and compare all the information up here, blah blah blah. And yeah, so another thing I wanted to show you, so I actually wanted to show you a company that I do not like currently, which is this one. So as you can see, just starting out, they have bad, and by the way, don't pay any attention to this or this. These are just kind of trends that they have an AI set up that are automatically trying to determine based off of this information what you should look for. However, it has nothing to do with actually what's going on. So again, we should not really look at those. Again, not having the P/E ratio reported, that's never a good sign. That means their bookkeeping's probably pretty bad. They're less volatile than the market on average. So that is probably a good thing if you want price stability. However, not having proper reporting is not a good thing at all. If I remember correctly, we could go to their statistics. And as you can see, we don't have a trailing or forward P/E ratio. So again, not good. If we go to their financials and we try to do the same thing as we did over with Stillborn Stillwater, you see, so we technically have increasing free cash flows, but they are still negative, which means this is definitely just not a good sign. I would not want to invest in this company because their free cash flows for literally the last essentially 5 years are all negative. So that's a red flag to me. That's not something that I want to look for in the company. And another thing is, so here are their earnings. There wasn't any estimate, or actually maybe there was an estimate, but it seems like they actually met the estimate. And then here, as you can see, earnings are all in the negative. So this essentially could mean this is a startup company. So again, we might want to look into that. However, as we can see, if we're going to look long term, this is not a company that I would look into. However, do keep in mind this is a small cap company. I mean, it barely has any outstanding. The market cap is tiny. It's only worth $345 million, where most companies are worth a lot more than that. So that's also something to keep in mind. So yeah, so that's a basic overview. I also like to do a discounted cash flow analysis, but that'll have to be another video because that will take a long time, way too long for me to explain it on here. But yeah, I mean, that'll be a good start to whoever really is looking to begin investing. And yeah, you have a great day. Bye-bye.